So a lot of Goldhouse's early work was actually in entertainment and media. And if you look at our work that we've done in research, cultural consultation, and promotion across television and film, you'll recognize household names like Crazy Rich Asians, Parasite, Everything Everywhere All at Once. And because of Goldhouse's efforts to change the way that content is cast, is directed, produced, marketed, distributed, there has been a sea change in the way the Asian Pacific diaspora is portrayed.
At Context Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how startups and venture capital are changing from the emerging manager perspective. We've talked to venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, I'm very excited to be having a conversation with Megan Ruan of Gold House Ventures. Gold House Ventures, I think, is one of the most fascinating venture firms because they're innovating at the intersection of culture, media, race, social changes, and venture capital and startups. Megan has an incredible journey that we're going to explore. We're going to talk about her personal path. We're going to talk about building Gold House Ventures, the API founder landscape today, and what's the future for startups and venture capital. Megan, let's jump right into this. You've worked in both private family offices and now lead a mission-driven venture firm. What was the moment that made you commit to investing through the API lens?
It's a great question, Tim. And I think there wasn't one specific moment. I think all of my journey with venture has also been simultaneously a journey with it through identity. Um, my first exposure to venture capital came when I worked for the Johnson and Johnson family office here in New York City. So I managed a $2 billion portfolio of venture capital fund and direct investments across the globe. I was traveling daily, weekly to visit hundreds of funds across the US, Asia, mostly in early stage venture. And that was what gave me the 360 lens of the venture landscape and kind of introduced me to this industry. One of the things I realized working at a family office is there is a food chain in the investment management world, and asset allocators are at the top of that food chain. And one of the really special parts of the job is that you get to meet with any fund manager that you want. And you also have the power to really shape the industry because you are the one ultimately controlling a lot of the dollars that get allocated to fund managers, including emerging fund managers. And something that was really fascinating about my role with the Johnson family office was just how many emerging managers I got to meet. I think I felt a lack of ability to express my excitement about emerging managers in that role. And so, coincidentally, around the time I started that job, I also helped co found Goldhouse Foundation and learn about the mission that Goldhouse has to advance the Asian Pacific diaspora through a mix of storytelling and investing in creators and companies. And so we had this opportunity to actually start a fund focused on an underrepresented demographic, arguably one of the most successful minority demographics here in the US, and build a fund around the advantage that Goldhouse had in cultivating and curating culture and identity for the Asian diaspora. So it was a matter of timing, of realization that starting an emerging fund right now is very competitive. So you really need to have a unique edge. And I felt that Goldhouse had that edge. And so decided to take the leap and build Goldhouse Ventures.
Can you share more about what is Gold House Foundation?
Absolutely. Goldhouse Foundation, Goldhouse, colloquially, people call us the Friendly Asian Mafia. I'm not kidding about that. I think a lot of the genesis of Goldhouse had to do with the fact that Asian Pacific as an umbrella in this country is very broad. And so, as a community, it's incredibly hard to unite across all of the dozens of languages and cultures and ethnicities and histories. And so that was the goal of Goldhouse was how do we get Asians to help each other more? How do we get each other all on each other's side and make sure that the image that we are projecting to the broader ecosystem is more affirmative, more authentic in its portrayal of the Asian diaspora. So a lot of Goldhouse's early work was actually in entertainment and media. And if you look at our work that we've done in research, cultural consultation, and promotion across television and film, you'll recognize household names like Crazy Rich Asians, Parasite, Everything Ever All at Once. And because of Goldhouse's efforts to change the way that content is cast, is directed, produced, marketed, distributed, there has been a sea change in the way the Asian Pacific diaspora is portrayed. What that gave Goldhouse Foundation was an incredibly unique platform of Asian celebrities, C suite executives, founders, investors to leverage to build other programs. So that's actually part of the reason why we were able to expand into an investment platform is because of the work that Goldhouse did, kind of unifying our community around its culture.
I'm a big fan of cinema and films. A recent movie that I enjoyed was Dee. Were you all involved in that?
We were one of the first investors in Dee the film. We were super excited to see that film premiere at Sundance and then be picked up by Focus Features as the audience favorite. Very heartwarming story for anyone who grew up in the Bay Area. A lot of personal connections, I think, to audiences, which is what has made Dee such a success.
The Johnson family. Can you share more who they are and how you landed that role?
Yeah, so I was headhunted from my job at Morgan Stanley. I worked in private wealth, advising family offices and ultra high net worth clients on investment management. So I was poached to join the Johnson family office. It is Johnson and Johnson, so I think a lot of people are familiar with the consumer health company, perhaps known for its COVID vaccine. Very old and established family here in the U.S. has a long-standing and very well-respected investment portfolio. And I was lucky enough to be part of that journey for several years, managing the venture capital portion of the portfolio.
Can you describe a decision-making moment where having underrepresented voices in the room actually changed an investment outcome?
It's an interesting way to phrase the question because I think that the people who are in the room making the decisions always changes the outcome of an investment decision. And part of why it's important to have more representation in check writing seats in venture is because those are the people who determine which founders get investment dollars. I think a lot of the push in recent years among emerging managers is to get more fund managers of color, women, LGBTQ, other underrepresented backgrounds to start their own funds, especially if they don't have the opportunity to be a decision maker at existing large fund platforms, because the automatic affinity that they have and also their differentiated ability to meet and source diverse founders means that more talented entrepreneurs will actually get the ability to get a check, launch a business, potentially become a unicorn. So I think it makes all the difference.
What drew you to venture capital and what specifically made Goldhouse a fund that you all felt needed to be built?
What drew me to venture capital initially was the diversity of the asset class. I think venture capital is inherently about innovation and about looking not 5 or 10 years down the line, but 10, 20, 50 years down the line to what is possible as a human race. And now, if you want to throw artificial intelligence in there, potentially also a non human race. And I think the job of an investor is to imagine what's possible and then look for the operators who are best positioned to execute on a vision that they have powerful conviction in. So I think being an investor is learning about something new every single day. It's about constantly being both the most curious and also the dumbest person in the room because you are looking for people who are truly the experts in what they're doing and you're looking to partner with them and hopefully be able to help them grow. That was very attractive to me about venture. I think another element, and maybe you would agree with this, Tim, is that venture is inherently a social industry. And I think people who tend to do well are those who are very extroverted, socially engaged, really just enjoy meeting and talking to new people because ultimately what building startups is and also what investing in companies is about storytelling. And so getting to both hear others tell me what their vision of the future looks like and also to help founders story tell on the back end once you've invested and need to help them convince their customers, their other investors, I think is really fun. I actually don't think I set out to build a fund focused on Asian Pacific founders. I think what I set out to build were a set of programs for Asian Pacific and other underrepresented multicultural entrepreneurs within Goldhouse. And Goldhouse already had such a strong footing and brand within the Asian Pacific diaspora that just became our core strength, right? It's kind of like a snowball where once it starts rolling, you really just attract the best quality talent and the best mouthpieces, platforms. And because we had done so well in our efforts in Hollywood, TV, and film, we had credibility to build for this audience. So Goldhouse became almost like this lightning rod for the Asian diaspora. I think leveraging that into a fund has been an interesting challenge because Asians are not necessarily underrepresented in founding and investing. Actually, if you look at the success rate of Asian founders, more than a third of unicorn companies in the last 2 decades had an Asian founder or co founder. And almost half of the Forbes Midas list of top early stage investors is Asian. You're looking at that globally, of course. And so you're looking at a fund strategy, if you're able to successfully execute, that is already going after this outsized, successful, outperforming demographic. So it's not a question of need per se as it is around strategically centralizing resources. So I think it's twofold. One is that we think, my team, that Asian founders and investors are a successful group and worth backing. And secondarily, that because of Goldhouse, we have unfair access to these founders and should leverage that to connect them with resources. That's the crux of the fund. That's why we started it. And I think that's what's allowed us to be successful in our first 3 years of operating. I think another piece of the puzzle is that because we are also so cross industry and not just focused on tech and venture capital and business, we're also very, very tied into Hollywood and entertainment and media. The types of connections and support that we can provide to customers are very different than traditional VC.
Goldhouse Ventures describes its work as market first social impact. What does that mean in practical terms?
So I'll describe a little bit about our fund model, which I think really speaks to the ethos behind Goldhouse. So market first obviously means profit driven, right? When you hear the word market, automatically associates with economic returns, making money. And that is first and foremost the job of a GP in venture, right? Your job is to make money for your LPs. That is like your fiduciary responsibility, your legal responsibility. And so we wanted to start a fund that was going to be financially regenerative. The social impact piece of it is that our fund is also owned by the Goldhouse Foundation because the two entities, although one is for profit and one is nonprofit, share this mission of elevating the Asian Pacific diaspora, including entrepreneurs. So, what we're able to do through our fund is have partner with limited partners who invest in us for a venture scale return, but also recycle the GP portion, the management fee and carry, back into the Goldhouse Foundation ecosystem, which helps us build more programs for Asian founders and investors, which in turn creates that flywheel of sourcing great founders.
That's a very unique model. I don't know of any other firm that has such a model. Do you know of any other firm that has such a model?
When we were first conceiving of this fund, we had a lot of conversations with our legal counsel about what was possible, what can be done within the worlds of foundations, endowments, nonprofits. Goldhouse was a 501(c)(3). We wanted to make sure to protect that status. And so it was a very creative process. And I think the model that we ultimately landed on felt like it aligned everyone's incentives correctly because all the people who were incentivized to help the founders be successful also wanted to see Goldhouse succeed.
You all have an accelerator arm. Can you talk more about the accelerator arm and how much of the fund is accelerator versus direct investing? Or not direct investing, but traditional venture investing?
Yeah, absolutely. So, just a story tell. When I first started at Goldhouse back in 2019, so this is now almost 7 years ago, the first program that I started was actually our accelerator. It is now officially housed under Goldhouse Ventures, but initially it was a program that we ran off of Goldhouse's balance sheet entirely pro bono. We didn't charge a fee, we didn't take equity. We just built really, really robust advising, mentoring, and growth programming for early stage founders. In the ensuing 6.5 years, we have worked with 11 cohorts of founders, 120 companies. They've raised north of $2.5 billion in venture funding. So it's been a very successful group of founders, and we're excited about their future capabilities. It was one of the drivers for us launching a fund. Many Goldhouse members who had advised these startups pro bono said, hey, look, it would be great if we could also benefit from this amazing group of entrepreneurs. Why don't you create a vehicle to invest in them? And the resulting venture fund is what now powers that program. So we still run it on a biannual basis. We still work with a small handful, it's gotten more intimate, of pre-seed stage founders, and they make up a minority of our investment portfolio. I'd say it's less than 20% of our investments. But I think drive outsized returns because favorable entry for us as a fund, also incredible opportunity to get to know founders over an extended period of time. It's a 14-week accelerator. And so we really do have the opportunity to do diligence on the team and also see what their progress is in terms of product shipment, development, growth, marketing. And we can help them a lot with their go to market in that time. So it gives us a much more, informed decision making position at the end of the accelerator to decide, hey, is this a company that we want to really double down in and, buy more ownership in? We've done that very successfully in a couple of accelerator companies.
Can you share more about the accelerator, such as do you have to come with an idea? Does it have to be incorporated, or is there like a studio model aspect to it? And you can maybe like be a founder and you all will help them with the idea. And then like generally, what are the terms of the accelerator model?
Yeah, it's very similar to Y Combinator in Ethos. So in our application, founders are asked to share the product idea that they have, the reason that they are founding this product, and we ask them all sorts of questions about the market, what they view the tailwinds and opportunities are, why they are uniquely positioned to build this product. We look a lot at founder market fit. And so we are typically choosing companies that have already a product. Usually it's not pre-product. They might be pre-revenue, right? They might still be in beta or piloting with some early customers, but that's generally the stage that we like to get involved. And then Goldhouse can really be helpful in terms of matching companies with appropriate advisors. For example, we accepted a company called Ruck, which it's almost like a DoorDash for construction supplies. And so we were able to match them with the founder of Caviar, also a delivery business, to mentor this company over the 14 weeks. And that had a significant impact on their business model. So we like there to be some bones to work with. You don't have to have a fully fleshed out idea. Totally fine to pivot and pivot again, but we want there to be something there that we can help you build. Terms wise, our standard accelerator deal is 250K for 6%.
For the founders you all work with, what does support look like during the accelerator and then beyond the accelerator?
The accelerator is definitely our most hands-on support. So, as I mentioned, 14-week program. Every single founder gets paired one-on-one with an advisor or multiple. These are typically folks that have invested or operated in that founder's particular sector in the past. So they're like the very hands-on, tangible, like problem-solving tactical support. Apart from the advising, we also do weekly master classes and workshops, and this is on a variety of topics from your marketing and branding strategy, your fundraising, your startup financing, product development, go-to-market strategy, hiring, talent acquisition, etc. And so it's a very robust content program. And beyond the accelerator, the graduates basically have the same support as all of our other direct portfolio companies in Gold Husk Ventures, which is that they have direct access to partners of the fund, our operating team. We try to be supportive without being intrusive. So there are some founders that we talk to weekly, others who we talk to monthly, every couple months. It just depends on their need. What we really want to help with is strategically opening doors. So, because our network of Gold Husk members is so robust across tech CEOs, celebrities, major media franchises, we're usually like 1 to 2 degrees of separation away from the person that that founder might want to meet. And so we really try to like throw our weight around in making those connections. But other than that, we are also there to support the traditional kind of like, you want to have a product jam session, you want to talk about your go-to-market strategy, you're looking to hire for a specific role. How can we help you do that?
The studio, or excuse me, the accelerator model is very intense. There's also the direct investing. Can you talk more about the direct investing stage, sector preference?
Absolutely. Most of what we invest in is seed series A. Our accelerator is where we'll invest in some pre-seed companies, and then we'll also do what we call strategic growth investing. Um, for those later stage growth companies, there needs to be an inflection point and the ability to still underwrite to a 10x the way we do all of our investments. And I think one of the things that is really interesting about the market that we're in is investors see a lot of repricing, especially post kind of COVID bubble, but it continues to happen where, um, because of market dynamics, because of rounds that may have been raised at overpriced valuations, some companies come back to market at very reasonable prices, right? Despite having had massive growth in the actual revenue or traction of the company. And so we'll look at some of those opportunities. We actually invested in a company called Chowbus at the Series C that had pivoted from being a food delivery business to a POS business. And they came back to market, had repriced. It was a really, really favorable entry price for us. And we could also see huge opportunity to help that company grow because of all of our relationships in the restaurant world, with the Panda Express family, Din Tai Fung family, ability to actually help this company grow. Um, so where there's strategic benefit and an inflection point, we'll consider later stage investing. And then sector wise, we're most focused on enterprise SaaS, fintech, healthcare, AI, and then to a degree consumer tech, but usually a bit later stage there.
What patterns do you see emerging among Asian Pacific Islander founders that feel a lot different from, say, 3 or 5 years ago?
I would say there's like specific patterns that I'm observing within the Asian Pacific founder demographic. I think founders overall are pivoting um, to need to be much more proximate to the industries that they're building in. I think we are now in a market where previously investors loved technical founders, technical teams, right? Because of their ability to ship product. That was seen as a huge differentiator. I think with AI, product development is a lot faster, it's a lot cheaper. So it's no longer your edge, so to speak. So your competitive advantage comes in the form of knowledge of customers, intuition for a given market. Maybe you have a special network or go to market edge. So you have domain expertise, right? That's the expertise. So I like, and my partner likes to invest in a lot more. We call them proximate founders because they're just closer to the problem that they're tackling. I think another, I mean, this isn't necessarily like a trend, but I do think that one of the underlooked parts of VC now is still these like niche, boring, unsexy markets where it's not necessarily something that has to be disrupted by AI, right? But there's still billion-dollar markets moving online that currently don't have a dedicated product offering. A great example is we have a company in our portfolio called Boomerang that's digitizing lost and found. They are literally turning pen and paper processes at airports, at stadiums, into a digital computer vision driven process. And who would have thought that lost and found could be a billion-dollar industry, but it is. And so I think those are like the real opportunities, is like just remembering that whatever the trend or technology is being the most focused on isn't necessarily where all of the pucks have to go. That's a characteristic I see in like very successful founders in today's market.
For API founders, do you find that the quantity and quality is increasing, or how would you say the state of the founder ecosystem is?
It's a really interesting question because I think that venture has evolved so much from when this industry first started, maybe 50 years ago in the US. It's a pretty young asset class if you think about it. And I think where we are at now is that I don't think there is a huge change in the total number of founders with potential for huge success, right? I think that that is still capped at a certain number of founders each year that truly have the potential to build decacorn businesses. I think more founders now have the ability to build businesses because of AI and because you don't necessarily have to have coding or technical knowledge to ship a product. So I think the total number of companies is increasing for sure. And the total number of really outstanding, you know, 100x return investments is probably about the same.
You've met so many API teams. What's a common feature of the ones that stand out?
I think the most important characteristics of successful founders today is being proximate to your market. It is focusing on things that are underserved. Maybe one other characteristic I'll add to that is being a good storyteller. I do think this is really important, especially for any multicultural or underserved um, market, because if your personal story is important to the product or platform that you're building, you better be good at telling it, right? That is an edge that you have over somebody else who's building an identical product because they don't have the personal story or motivation to be building this as you do. They don't have the credibility to tell this story. So I think if you can tell it really well, I would add that to the characteristics of a successful founder.
One of the things that I really admire about Gold House is that you all are really good about community building. You all are really also good about conveying that community building and how you're valuable to the community. It seems like the ability to tell your story is probably something that you all help your founders with. Is that a good read?
Storytelling is something we work with founders on a ton. I would say it's a huge part of our accelerator programming. We not only do pitch practice and how to, describe your product to a customer, to an investor, but we also do media training, press training. So, when you have as a founder, you have so many audiences. You're pitching your idea to your customers, your potential employees, right? That you're trying to pluck from lucrative, well paying jobs. You're pitching to investors. So storytelling is huge. I would say we also want to help founders tell their stories on bigger platforms than they might themselves have. So, a good example of this is actually more in the consumer space, but we've connected several brands with major media platforms like Disney, Netflix, to be promoted alongside major motion pictures like Shang-Chi, Ryan the Last Dragon. So there have just been a lot of opportunities where if there's brand alignment with a piece of content or media, we also want to make that connection. You're also seeing an increase in celebrities kind of coming to the table as business partners and spokespeople for brands. It's not a new concept, but I think the way that celebrities are approaching it nowadays is very different. It's not no longer as desirable from the brand perspective for a celebrity to just, slap a face or a name onto a product. They really need to be there side by side as a business partner and really understand the product. So a great example of this is we have this chai company, Kolkata Chai, and they're partnered up now with the actor, producer, comedian Hassan Minaj to promote South Asian chai. And it's something very near and dear to Hassan's heart. He really understands the product. He's willing to put in the sweat equity and actually show up to their brick and mortar stores and drive foot traffic. He'll take the product on tour with him when he's doing his Netflix tours. So we like situations like that where the storytelling is really authentic. It comes from a perspective of someone who really gets it.
venture capital is changing a lot right now. There's a perceived and a real bifurcation of very large funds, the Andreessen Horowitz, the General Catalyst, the Lightspeeds. And then there's new and emerging funds like Goldhouse and ourselves. How has this changing dynamic been helpful or hurtful to the future and growth of Goldhouse?
I think you nailed the current dynamic in venture. I think it's an interesting social environment for mission-driven funds. Venture is definitely more fragmented now. I would say this will continue. This big funds are going to continue to consolidate their platforms, their investment dollars. They're going to continue to move both up and down the food chain, so that not automatically kind of crowds out some of the more mid-sized funds. What I think this creates space for is a long tail of solo GP or smaller spin-out funds. So you see a lot of these kind of like 20 to 50 million AUM funds where the advantage is really centered around the GP or GP's personal network, their strengths, their viewpoints. I think, Tim, this definitely applies to you, right? It's like somebody really monetizing their own expertise and network and not trying to scale that necessarily, right? This is kind of going back to basics for venture. It's like we are a cottage industry. It is really about the partner's own network and ability to like curate a founder ecosystem around them. And so I think that's actually really beneficial to mission driven investing because one of the benefits of being a small team running a small fund is that your identity is your edge, right? That's the thing that founders resonate with the most. And so if impact is part of who you are and part of what you care about in both the people you work with and the investments that you make, I think it's actually to your advantage to be in this more fragmented, like smaller fund environment.
Where do you see Goldhouse in 3 to 5 years? What's improved? What's changed?
For Gold House, I think we will continue to grow our initiatives into new verticals. I think our core competencies will always be in entertainment and media and tech and venture, but we'll continue to expand beyond that creatively into things like fashion and food and who knows, maybe even government and politics. I think there's just so many areas where the Asian diaspora shows up but could use better representation. On the ventures side, I hope that our fund platform continues to grow and that we start to see some of those much anticipated exits from our Fund One portfolio. That is also reflected in the growth of our founder funnel and the brand of Bold House Ventures and the overall venture ecosystem. What I would like for us to continue to do is play this kind of centralizing role for other multicultural funds. You mentioned at the top a lot of other funds focused on Black, Latin, women, LGBTQ, veteran founder audiences. And I think one of the cool things that Goldhouse has always done has been to try to be a node for all those funds and help everybody work together. We do that through currently something called our One House Leadership Coalition, where we're banding together about a dozen funds to make diverse board and advisor placements at private companies. But I think this can really expand to all hiring, right? Fundraising dollars, all of those things where we really do need to kind of consolidate resources for the community.
Fundraising is a critical aspect to what venture firms need to do. Um, and we had a pretty challenging fundraising environment where it took us 2 years to go fundraise for Fund One. How do you view the fundraising environment right now for emerging managers? And what suggestions do you have for fellow emerging managers?
Question of the hour. I think like fundraising is funny. I've sat on all sides of the fundraising table now at this point, right? I've advised asset allocators. I've been an asset allocator. I've sat on the LP side of the table for many years. I'm now on the GP side, and I also interface daily with founders that are fundraising from us. So I truly have like been everywhere in this like circle spectrum of fundraising. I think as a GP and especially as an emerging manager, fundraising is just constant, right? I think there's just no getting around that fact. And so I think if you can have that mindset, you can be less likely to be discouraged by the fact that it does kind of constantly feel like a raise. What I would say is that patience is just necessary right now, and patience and resilience because funds that like we raised our fund one in 2 months, right? I doubt that will happen with our fund two. I think it's raising a $30 million fund in 2 months is unheard of in this environment, right? Unless you're, you know, spinning out maybe from a well-known fund platform and raising a smaller fund as a solo GP, then I think it's possible. But for a lot of other fund platforms, I think it can take double, triple the length of time that it would, right? LPs are also crunched. They have a lack of distributions, a lack of dollars to deploy. So I think the understanding that it is a market dynamic and not necessarily a comment on your talents as an emerging manager or, you know, your track record, it's not always about that. So, but I do think the advice I would give is to really just focus hard on a few anchor relationships that you think can anchor your fund. Because it's the same thing as being a founder, right? Until you land that lead, it doesn't matter how many angels and follow-on investors you have, you can't close that fundraise. And so you need to be a little bit strategic about putting like the big rocks in the bucket first and kind of spending the most time nurturing those relationships before you know, it can be very tempting. I think I talk to founders about this a lot who are like, I want to talk to this angel or that person who's really enthusiastic about my company. And I'm like, great, can they write you a $5 million check? Like, if the answer is no, then there might be some other conversations that you want to prioritize. And I think the same applies for emerging managers.
Do you think founders raising a Series A have it more challenging than emerging manager founders?
I don't know how you could compare the two. I mean, I think the amount of dollars being raised, the criteria that you're being judged on are so different. I think raising a Series A right now is challenging, but definitely very doable. And I think your timeline is definitely going to be shorter than raising an emerging fund. Um, yeah, I just think they're two totally separate things.
They are. Do you think more firms will be similar to Goldhouse in terms of reinvesting management fees and carry and profit into communities like Goldhouse?
I would hope so. I mean, I think it's a great way to align incentives because you are eh, necessarily you're basically putting your money where your mouth is, right? To founders. You're saying, hey, I want to be able to build for you. Therefore, I am going to offer you the best offering as a venture investor in a platform. So you should come work with me. So you're building like the top of funnel deal sourcing side of it by giving back to a community. Um, However, I don't think it's something that can just be built from scratch. There's a reason why we did it in the order that we did and founded Goldhouse 5 years before we raised a fund. It takes a long time to cultivate and nurture the type of network and community that would enable a structure like ours. So you have to be willing to outlay that effort up front if you want to have this type of structure.
What's something you wish more mainstream VCs would adopt from your model? Is it the give back aspect? Is it the helping a certain socioeconomic group?
I actually don't think that VCs should necessarily look to adopt things from each other. I think, you know, you kind of can't help sharing some similar elements, right? Everyone needs to build a personal brand and have a story and have a reason for being. But I think that, you know, what makes us stand out as an investor is incredibly hard to replicate because we have this unmatched network of Asian celebrities, creators, and company builders. I don't think you could build this fund. I don't think you could replicate this fund. And I think that's what every fund should strive for is do something that no one else can. In ethos, though, I would say I do hope that more funds give back because I don't think all fund managers realize the full returns of how much that comes back to you. If you are visibly and authentically even giving to the community, it really does, you know, come back to you in spades. So, you know, I can't tell you the number of conversations that I start off with founders I've never met before that I, you know, got introduced to me cold and they know all about Goldhouse and they have all this excitement and affinity around what we do. And I didn't have to say a word. So I think, you know, pre-investing that, giving back, it really will benefit you. And I'm sure that's something that more people are going to realize.
I think Goldhouse is so effective at community building. And I'm curious, what other firms do you think or even close to rivaling what you all do?
I mean, we work with tons of other multiculturally focused firms that I think do a great job of community building. And I think part of that is because they are all kind of lightning rods in their respective communities, right? You've got like the Harlem Capitals, Mac Venture Capitals, EBG. I'm gonna, you know, fail to state all the important ones, but Vamos Ventures, like all these funds that are kind of focused on their demographic, whether it's Black, Latin, women, LGBTQ, and doing such a great job of it. I hope that they will be joined by more fund managers that are just trying to get more capital into the space, right? Like I welcome other capital investing in Asian or other multicultural entrepreneurs because I just think there should be more of it. I think what we all just need to do is find a really like repeatable way to work together because that's what venture has been historically, right? It's a pretty well-oiled ecosystem. Information is widely shared, and that just needs to be true within the multicultural segment of venture as well.
When you build community, you build awareness, you build word of mouth, do you find that over time that's yielded significant and strong inbound deal flow?
Definitely. I think that's like the number one thing that uh, yields our differentiated deal flow is just the strength of the relationships and affinity that people feel towards Goldhouse, whether it be a founder or an investor, just leads to like the highest quality deal referrals.
What's one new fun founder trend that has your attention now that you all are really thinking and talking about within Goldhouse?
So I think a trend that I am excited about is still underserved markets that are moving online. I think we have a number of companies that suit this criteria where they're basically building something that truly didn't exist that nobody would expect to be a $1 billion market. Great example of this is company called Palm Street. They're building a social e-commerce platform for plant enthusiasts. Who would have thought that plants and adjacent items like gardening tools, reptiles could be $1 billion market? Yet it is. And so I really am like always on the lookout for these kind of like strange niche ideas where you wouldn't think that building a technology around that idea would be successful, but it is. Those are the kinds of stories that get our team really interested.
We're going to move into some rapid fire questions to close this out.
Okay.
Uh, Favorite breakfast item?
Pancakes,
Favorite travel spot?
Italy.
Favorite movie or movies?
Favorite movie is Gone with the Wind.
Megan, it has been truly delightful to chat with you. This is really fun. I have immense respect again for what you all have built at Gold House in terms of lifting up and raising the API community, helping founders, your accelerator, and wishing you and your team the very best. And thank you again for taking the time to chat with us.
Thanks for having me, Tim.